It's almost Friday and the market is not falling apart after a rout on Thursday. This is your morning jolt, and I have a bunch of things you need to know to get your market day started right. Not three, bunches of things. First up, got to go around Wall Street a little bit. I'm going to look off my paper here. Goldman Sachs sees the S&P 500 rising to 3,000 by next year. It sees another 5% to 2850 this year. My takeaway that's going in the newsletter this morning, what trade war? It's interesting that Goldman comes out with this call because they see a sharp deceleration in GDP next year from 2.9% this year to 2.2% next year, and then it falls off a cliff to under 2% thereafter. Nevertheless, they see the S&P rising, corporate profits pretty strong. They see price to earnings multiple. I know this is really geeky. You don't want to hear about this stuff, but it's important. Staying flat, so bullish outlook in corporate profits. Very surprised. It's an investment bank. They're supposed to be bullish. They might need to make money. Anyway, what do we got? Tesla. Got to give a shout out to Bloomberg BusinessWeek. They did an extensive feature on Tesla. They went to visit the factory. They talked to suppliers. You came away from that interview that Tesla is a hardworking founder who's trying to make a couple bucks, and he's at war with Wall Street and a couple of Twitter trolls. And that employees need to pick it up on the safety. They shared a story in there on how one worker was apparently or allegedly playing around in the parking lot, got forked with a forklift, and he had to have his leg amputated. I think I got that right. Anyway, pretty gruesome stuff. Good story by Bloomberg BusinessWeek. Tesla remains a battleground stock. Be sure to check in daily on the street. We have a whole Tesla section on the street that talks about it. One of our featured writers, Brett Kenwell, he writes about Tesla daily too. The street's tech columnist Eric Jones has been all over it as well. Battleground stock still under pressure. Watch the bond market. They're sending a very powerful message on Tesla. Bonds are hovering around an all-time low. Very, very disturbing. Next up on the Round Wall Street segment, Actually, that's it. We're going names on the street. I talked to Dunkin' Brands CEO David Hoffman Wednesday afternoon. He was appointed CEO yesterday. Very impressive guy. Very impressive. I think he has extensive experience. He spent 22 years at McDonald's. He started as a line cook. He's got a great story at a time where there's so much eyes on the fast food industry and how they're getting the workers, how they're losing the workers, and what they're paying them. So good story for Dave Hoffman. Definitely the right guy to take over as CEO. If he can crack the code on how to get Dunkin' Donuts doing well internationally and get people into the Dunkin' Donuts store in the afternoon, he may have a plaque on their Boston headquarters office by the year 2028. Dave Hoffman, definitely the right guy. I don't know how short seller Jim Chanos feels about it. He's been aggressively negative on Dunkin' Donuts. I sent him an email. Still waiting for Jim to get back to me. Holler at me, man. Come on, get back to me. I got to know what you think about this guy. It's hard to slam him. He's got a hell of a lot, really great experience. Let's get real. What else we got? We got, Taylor Rogers, one of our fabulous new summer interns here. She hopped on the phone with MoviePass's CEO. MoviePass's CEO, he seemed pretty chill, and I don't know why he is in that interview. Check it out on the street. MoviePass's parent company, Helios and Matheson, stock is at 17 cents, hitting an all-time low. This thing peaked at about $33 in October last year. Now it's at 17 cents. I don't know why he's so chill about it. A lot of questions swirling around Wall Street about this company's financials and whether it will survive 2019. That CEO is pretty bullish. And I talked to Joseph Abboud, a well-known fashion designer too. That's a cool interview on the street too as well. He's been a champion of making clothes in America, and I think many retailers need to take a lead off of him, and it may hurt their cause, but bring the stuff back to America, raise the quality, get out of China. That's not, you've used that sourcing pool for too many years. Lastly, rant of the day, and I don't want to do this, I'm running over time here. Rant of the day, Papa John's founder, John Schnatter, all he had to do is shut up and run the company. Now he's out as chairman after making racially insensitive comments, as first reported by Forbes earlier in the week. This fits back into my overall thesis I wrote about a couple months ago. Papa John's in play. This is the moment where a company like a Restaurant Brands or Inspire Brands that owns Arby's and Buffalo Wild Wings should come in and make a play for Papa John's. They have leadership pitches in digital, a really great awards program, and the message of better ingredients still resonates with consumers, especially millennials today. Papa John's should be on the sales block now that Schnatter is out. He's still has a big stake in the company, but now's the time to make a play. That's all I got for you. A lot of stuff going on there. Be sure to sign up for your Morning Jolt newsletter down below. See you guys later.